Hello, welcome back. So, today we're going to talk about installment sales. So, if you're a global entrepreneur or if you are startup founders through running a US business, today's topic could help you and could save your cash flow. I'm not only just a tax professional, accounting professional, and finance professional, but also I'm a businessman. I run multiple successful business. So one of the most important lessons I learned about running a business is to maintain a good and healthy and organic cash flow of that business. The whole business model can be profitable, but if that cash flow is not healthy, you are not actually getting the money in your bank, then maybe that business will go bankrupt. Because if you don't get the cash, you can't pay the bill. Okay? So, one of the great things I learned about starting a business is to keep a good cash flow. And today's video is going to help you that because you know what? You don't want to pay the tax before the money hits your bank. That's a general rule of thumb. Come on. You don't want to, pay this money and get your money moved outside the bank if you don't even get that money in your bank in the first place. That's a general rule of thumb of running a successful business. So, you know what? We are going to use a great tool called Form 6252 to help you avoid to pay that. Okay? Unless you get the money and then you pay the tax. You get money, you pay the tax. That's more fair, right? But you have to use that form. So we're talking about installment sales. So yeah, let me give you my client example. So one of my clients is who's known US person and who formed a US LLC and operates as a gaming studio in US. And they develop many games. And some of the game is successful, some of the game is not so. But one of the game is really successful. But all of the developer teams live and code not in the US, so in other parts of the world. So the general rule of thumb is that they got a very good reason of not trigger the ECI. So basically, they can literally pay zero tax in US and just disclose their foreign status. But of course, they need to fulfill the tax duty of their own jurisdiction. So that's the if only if that's the story. I'm sharing the stories because the practice is a little bit more complex. So so basically they got a very successful game that run globally, but most of their players actually from US. And so in tax law there is a US nexus. So for example, if there are you got some physical presence in US, you got for example some employee that work in US, and if you got physical equipment, physical presence, working office in US, you know what, there will be counted the ECI. And unfortunately, because the game is operating intensive, and in order to maintain a good community, you know what? They built a Discord community, and they need to hire some marketing and operating assistants. Even though it's part-time, they'll hire someone who is a US citizens and work as a part-time assistant for operating the Discord. And unfortunately, they triggered the ECI. And you know what? That's why they come to us, because their game is pretty successful, and there's a US buyer trying to buy their game, and you know what? Unfortunately, they won't be able to just pay them because come on, someone you want to buy this, you will give them a pretty high price using the future cash flow discount and all that, and give you earning and price ratios and all that. You want to higher that ratio, and so through all this negotiation, I just save you all sort of detail, but at the end results, they are going to enter into an installment sale. That means the asset will be sold. Of course, it's not just about the digital source code assets, but also the whole thing, right? The whole operation of that game, the source code, the user database, of course, because it's a game, they got like ad, and they got like ad contracts, and ad actually from the US, there's another nexus of making the judgment of ECI, unfortunately. So of course they got like a trademark and all that, goodwill, and yeah, everything, just everything wrapped together as a package and sell that. But even though they pay, but it's installment pay. So again, to through the 4 or 5 years in order to complete these payments. So basically, I believe the current contract is like 4 installment payments. So they already pay that, but in the next 3 years they're going to continue to pay. But at that first payment, they're going to transfer all this asset, right? The physical asset as well as the digital assets to that US buyer. So this is a typical installment sales. So basically, it's not going to just be everything fulfilled in one tax return form, but rather it's a continuous version of tax form that continue, at least because it's like a 4 installment. You're going to continue to file tax return for 4 years, and for this year you're going to form 6252, and then as future consecutive 3 years you could file form 6252 continued. Okay, so yeah, and there are some of the basic calculation here that I'm going to explain in the next video, but it's really simple. You calculate, the general rule of thumb is that you calculate the percentage of this gross profit. So basically, gross profit is like you sell that at a certain price, and you subtract all these bases, the selling expenses and all that. You extract all that, and then there's a gross profit, and then you use that, and the selling price. You got the gross profit percentage. You use that percentage for every installment transaction, because every time they get an installment, some part of that installment sales transaction is about the basis, right? It's about the price basis and all this like cost of that certain percentage, but with a premium, that's your profit, right? So every time you got this payment, it's not all taxable, okay? So you are going to get that taxable gain of every of the installments transaction. You calculate that taxable gain, and if your company not just a sell, come on, it's an ongoing operation, because that company, right, develop tons of games, and then each of the games is actually earning money, okay? So basically, you're going to use that taxable gain, and you're going to calculate everything else, and then you got all this tax that you are going to pay. So if you single that the simple installment sales out, basically you don't need to pay the whole gross profits, and then you calculate the tax and got taxable gain, right? You don't need to do that. So every time you got a installment payment, you calculate the respected taxable gain, and then you pay the tax. So that will ensure that you receive that installment payment. As I said at the very beginning, the money actually hits your bank, right? You got that money, and then you pay the tax. You got that money, you receive that money, and you get that portion out, you pay the tax. You get the money, pay the tax. Okay, you don't need to enter into a contract and then you pay all this, because you do not actually receive. It's an installment sales, but you need to utilize this tool.